Welcome back to DJJI Tutorials. Let's discuss what tax benefits are available for saving for the future. An RESP is a savings plan used to save for an individual's education after high school. And RESP can help pay for an individual's post-secondary education when they attend a trade school, CGP, college, or university. The individual may also be eligible to receive government grants and bonds paid into their RESP, such as the Canada Learning Bond, the Canada Education Savings Grant, and other provincial benefits. The person that opens and contributes to the RESP is called the subscriber, which could be a parent, grandparent, guardian, or someone else. To qualify for the Canada Education Savings Grant, the beneficiary must have a social insurance number and be a resident of Canada. RESP contributions cannot be deducted from the subscriber's tax return, and they will not receive an information slip. Multiple RESPs can be opened, up to a lifetime limit of $50,000. Payments are receivable after enrollment in a qualifying post-secondary program. A maximum of $4,000 can be paid out of the educational assistance payments within a one-week period of a specified educational program, and $8,000 of educational assistance payments in the first 13 weeks of a qualifying educational program. Educational assistance payments are reported on the beneficiary's return on a T4A slip in Box 42. To open a tax-free savings account, you must be at least 18 years old and have a valid SIN or TTN. Remember, it is tax-free throughout your lifetime. The TFSA contribution room is on the notice of assessment and will display the maximum contribution allowance. If you contribute more than the allowance, the extra amount is called over-contributions and may be taxed at 1% every month until it is withdrawn. RRSP is a good opportunity to reduce tax paid in each year, but the amount contributed cannot exceed the room that is allowed. See your notice of assessment after you file your return each year. You are eligible to use amounts contributed from March 2nd to December 31st in the previous year and January 1st to March 1st in the current year. If you contribute more than the allowance, the extra amount is called over-contributions and may be taxed at 1% every month until it is withdrawn. RRSP can be opened any time, and there is no minimum age limit required to start saving in an RRSP account, but you cannot contribute past December 31st in the year you turn 71. Portions of your RRSP can be used to buy or build a home through the Home Buyers Plan or finance the Lifelong Learning Plan. But they must be repaid within a time frame, or they will be deemed as income on your tax return. When you turn 71, you can withdraw and report the amounts as income, convert them to an annuity, or transfer to a registered retirement income fund. A registered retirement income fund is designed to provide you with a steady income at retirement. It is established at the age of 71. Contributions cannot be made to this fund, but you must receive at least the minimum amount from the fund upon retirement, and this amount must be reported on your tax return. A first home savings account is a registered savings account that allows first-time homebuyers to save money to buy or build their first homes. 3 criteria must be met. You must be at least 18 years old, be a resident of Canada, and be a first-time homebuyer. You can contribute up to $8,000 in the first year, and the lifetime contribution limit is $40,000. If you contribute more than the allowance, the extra amount is called over-contributions and may be taxed at 1% every month until it is withdrawn. A registered disability savings plan, or RDSP, helps individuals who are approved for the disability tax credit, or DTC. To qualify, you must be approved for the DTC, have a SIN, be a resident of Canada, and be under the age of 60. Beneficiaries can receive the Canada Disability Savings Grant and Savings Bond. A fund can be opened for a beneficiary at any time. Lifetime contributions are capped at $200,000. There are special cases pertaining to the limits of disability assistance payments, or DAPs, that can be received in 1 year. Benefits are reported on the beneficiary's return on a T4A slip in Box 131. Please share this information with your classmates and friends. See you next time.